Hi everyone, this is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. Oh my goodness, I think the market might be catching the flu. Alright, no, I'm not here to make light of people's suffering with the flu or the deaths that have been caused by the new coronavirus. But what does bother me is the market's incessant use of taglines and how it latches onto something and seems to apply that to whatever has occurred in the market that day. Last week, in the middle of the week, the market was up. Media said, well, that was because there had been fewer than expected reported new cases. The end of the week, we get the market moving to the downside, and that's because, we're getting more new cases. Well, now, on the weekend, we've had a report that there have been 600 new cases in South Korea, which is the largest number outside of China, and then 150 in Italy. In the grand scheme of things, that's really not a whole lot, which I'll show you in a minute. But at this point in time, if the markets were to open right now, the S&P futures are showing that the S&P would open down 50 points. And that, my friends, is nothing to sneeze at. In the intro, I mentioned that the cases of the coronavirus really, when it comes to the grand scheme of things, isn't even on the map as far as what could happen with illnesses. Take a look at the chart that I have on the screen. This shows you just the illnesses, deaths, medical visits, etc. from the regular flu, just the influenza, H1N1, the couple strains that we have of the regular flu, and you can see that the number of cases vastly exceeds anything that's going on with the coronavirus, especially outside of China. What's the difference, though? What's the problem? Why are people so concerned about this, or why do they seem to be concerned about it? And it's that black swan thing that we talked about in our outlook, the unknown factor. We'll say that the one difference is with the coronavirus, people are contagious when they don't even show any symptoms of having the flu yet. They don't even know they're sick, and they're contagious and passing it on. In fact, they just had a release of people back to Israel. There was 11 people that were on that ship that had been quarantined outside of Japan. They quarantined them, they cleared everybody, they sent them back, and Israel said, hey, well, we're going to quarantine them ourselves. And when they did, they tested one of the patients, and one of the patients came back, one of the passengers came back and had the virus. But she wasn't sick. She didn't know it. She was just viewed as a carrier. She hadn't even shown any symptoms of it at all yet. That's the scary part of it as far as how far can this spread. But the other thing, I think, when we go to actually looking at the chart of the markets is the fact that I'd mentioned this several weeks ago as well, that we've come so far so fast in the market, and there's no doubt about that with this big run that we've had, that it wouldn't take much for a lot of the smart money just to use anything as an excuse to go ahead and take profits, and that could be what's going on. You know from our outlook that we had 3 different Elliott wave patterns that were giving us a target price around 346, so we're pretty close to that. Now, pretty close doesn't usually get it within Elliott wave and Fibonacci ratios. Usually those targets, it's amazing, but usually those targets actually get hit or touched. Now, I really would expect the 346 level to get hit sometime within the next couple of months before the summertime. We'll see if that's going to happen now or if we have to pull back a bit. If we look at the moving averages, you can see that on Friday we did break the 10-day moving average, which is a little concern. But then we came down and hit the 50-day moving average back at the end of January and then started a new leg higher. We could do that now. Again, there's a lot of time between now and when the market opens tomorrow morning as far as what could happen with the futures. But right now the futures are looking for a fairly significant move to the downside. Now I wanted to update you on some of the charts that we showed in last week's recording. Look at this move down. We talked about this last week with the interest rates, and holy cow, we're continuing to move down in that wave 3 in a big way. So rates have broken this area of support. We thought that they would come down here, and then they've broken below this level in this wave 3, and it looks like we're going lower from here. Now, if we put the moving averages on here, you can see that we're a bit oversold here as far as the move to the downside in rates. And we would expect some sort of a bounce back to fill these gaps and move back up to this area of support. But if the futures open the way they are now, that ain't going to happen tomorrow. It may be another gap down. At this point in time, we'll have to wait and see. I did want to show you this, though. We introduced the high yield bond and the thirst that people have had for yield and the amount of money that's taking the additional risk of going into high yield bonds, lower credit. instruments, if you will, and we've had a little bit of a leveling off here, which is not surprising with the fact that we're at that previous wave 3 high. You would expect that to be a little bit of an area of resistance, and we'll see if it catches itself and we can move to the upside from here. If we do get a significant move down in the market at this point in time, I really don't think that we're going to break that on this go round. We might actually even come down a little bit lower. People will just be going into safe haven stuff, more like regular bonds, more AAA higher rated bonds rather than the more junk bond market. And then if we look at the dollar pulled back a bit, but when we look at the moving averages here, you can see that wasn't necessarily such a great thing. I mean, it's nice. We've been talking about how we don't want the dollar to get too high because that affects internationals as well as what's going on. I mean, China, let's face it, is pretty much shut down. And it is going to have some effect on supply chains and things. I get all that. I understand all those things. If you're saying, well, it does matter. You know, the coronavirus does matter. So much business is done. China's 20% of commerce now. So the fact that the country's shut down may not affect us directly as far as the number of cases that we have here in the U.S., but as far as our companies here getting parts and things from China, yeah, it matters, and it's slowing things down. However, and this was a good point that was made, I criticize the financial media a lot, but here was a good point that did come out, as usually when that stuff occurs, like maybe we're not getting enough parts for our iPhone, say, and so iPhone sales suffer. Well, usually those are just put off, and then when the coronavirus calms down or start to get a handle on it, assuming that we do, well, then those purchases that were going to be made and might have been put off a little bit, they get made when the parts come in and the products are available. Usually it's just it moves it a little bit, but it doesn't end the sales. I mean, the sales don't go away. They're just pushed out a little bit further. So it slows down the GDP, slows down economic growth and all that stuff, but then it gears back up again once the opportunity comes. But we don't want the dollar to get too high, and we had a big move down in the dollar on Friday, but look, we were just overbought on the dollar. We had gained that separation. Remember the rule, no security in any time frame, just very far away from its 10-day moving average. I know you're tired of hearing that, but it's so true, and it's a great thing to watch in your trading. And so all we did was come back down to that 10-day moving average with that move lower on Friday. Looking last but not least at the VIX, you can see that even with the move lower on Friday, the VIX was like, that's no big deal. So we've had this breakout in volatility from this descending triangle that we had on the VIX. Big, huge, massive descending triangle. And so we've broken to the upside. We came down and we tested that the beginning of last week, and then towards the end of the week, a little more volatility. And again, if things don't change between now and the market open tomorrow, market's going to open to the downside. You'll see that VIX explode back higher. So certainly going to be an interesting week. And we'll see how this whole coronavirus thing plays out over time. But last point, just to reiterate, the issue with it is not the number of cases, it's the unknown factor. And the market hates uncertainty. And that's the black swan area of this, or the warning flag, caution flag, however you want to view it, is the fact that this thing could get a whole lot worse. It may not be that bad yet, but it could get a lot worse. We'll see what happens in the rest of the week. Hope you had a wonderful weekend. Be back to talk to you again next time. Take care, everybody.